Hey, what's up guys, welcome back to the channel. In today's video, we're going to be going over a quick corporate and chart analysis of Nikola Motors trading under the ticker symbol NKLA to get an idea of what exactly is in store for this company in both the long term and the short term. Now, before we get into it, I do want to mention that I am personally long Nikola shares. It is a portion of my long-term clean energy growth portfolio, and I'm definitely planning to add to my position as these guys achieve additional milestones later this year. So I'll definitely be sharing some of my own opinions on this stock later on in this video as well. I also want to quickly mention that I know this stock is quite a controversial one, and there's been a pretty strong contrast in the views of a lot of different people in the community ever since this company went public last year. So if you're somehow offended by Nikola or the hydrogen fuel cell industry in general, I recommend you click off this video right now, because I don't want to waste any of your time if you have an inherent bias or lack of knowledge about this industry. So with that little rant out of the way, make sure to drop me a thumbs up and subscribe to the channel if you guys find this video helpful. And without further ado, let's get into the video. So for those that might be unfamiliar with what precisely Nikola does, these guys' goal is essentially to design, manufacture, and sell both battery electric and hydrogen fuel cell Class 8 trucks for the commercial transportation market. This company was actually founded very early in 2015, and since then has put together a team of more than 450 employees at their main headquarters in Phoenix, Arizona. Rapid prototyping, supply chain partnerships, and technology implementation for their Class 8 trucks has been Nikola's main focus over the past 4 years, especially since they've gone public. But very recently is when we're really witnessing an inflection point into the marketing and production for these guys' vehicles. I understand that one of the main controversies against Nikola was that they went public through a SPAC with no revenue, which definitely made it quite hard to value a company. But the important thing to realize is that the whole point of going public through a SPAC is to enable earlier stage startup companies to be able to access the capital markets without the stringent financial qualifications needed for an IPO. And by financial qualifications, I mean revenue and net income, something which a startup company that is only 5 years old will most certainly not have. And this was very well proven by all the other EV startups that also went public right after the Nikola merger, such as QuantumScape, Romeo Power, Fisker, and very recently Lucid Motors. The SPAC process essentially gives investors early access to companies, but obviously also provides a much higher risk investment environment. But at the end of the day, if you're able to handle that extra risk in favor of higher reward, then the best way to value an early stage company like Nikola is to look at their milestones. Having a look at the 3-year timeline Nikola released in their annual report of 2020, we get a very clear idea about which development stages these guys' products are truly in right now. As you can see, they're first focusing on the testing and production of the battery-only Class 8 truck, and then slowly moving into the fuel cell Class 8 truck through 2023 as the infrastructure for hydrogen begins gaining more and more traction. In my opinion, the hydrogen economy is definitely inevitable, but to make it a reality, we need companies to take initiatives on both the front end and the back end, and this is exactly what Nikola is doing. Over the past 6 months, these guys have indeed tested and manufactured multiple prototypes of the Tre battery electric vehicle that were shipped over from their joint venture plant in Germany. The Italian truck maker Iveco is the one that provides the bodywork and trim for these vehicles, whereas Nikola is actually responsible for the software, the drivetrain, and suspension engineering. And unlike what many skeptics on the internet believe, all of these prototypes are indeed functional, as demonstrated by multiple third-party tests and video footage on Nikola's own YouTube channel, which signals to me that we are most definitely outside the territory of this company being a so-called scam. And at this point, the risk is much more about the execution and how quickly these guys are able to reach the milestones on their 3-year timeline. As a matter of fact, this year and early 2022 are going to be especially pivotal for this company, as the trial production for their Tre BEV is expected to move from Germany into their newly built Coolidge, Arizona facility. And following that, the delivery to initial customers is also expected to begin in the 4th quarter of this year. And given these milestones, I expect to see a pretty major shift in investor sentiment from both the retail and the Wall Street market for this stock, whether it be for the better or for the worse going into the next 6 months. And that's exactly why I think Nikola stock is a good opportunity to look into right now if you are interested in investing in the hydrogen and trucking industry. So far, we've mainly been talking about the Tre BEV and Nikola's plan to bring that vehicle to market later this year. But obviously, there is a whole another portion of the company we have barely touched upon in this video, and it's the hydrogen fuel cell side of things. The Tre BEV is actually supposed to also have a fuel cell version of it that's expected to be prototyped at the end of this year and then tested throughout 2022. And in my opinion, this will open up a huge opportunity for Nikola in Europe, where cab overs are actually the mandated form of Class 8 trucks, meaning that the Nikola 2 design, which is a second truck that Nikola is working on, would not be able to sell in that continent. And given the fact that Europe is leading the entire world in building out the hydrogen economy, the hydrogen fuel cell trucking and infrastructure side of Nikola's business model is the most attractive for me as an investor. These guys are already making strong progress in setting up the foundation for this big venture, as earlier in the year, they announced a set of partnerships and investments that secure both the location and source of energy for their hydrogen refueling stations in the United States. The stake they took in the Indiana hydrogen plant not only guarantees them clean hydrogen that's not produced from natural gas, but also provides them access to a very crucial trucking network in the Midwestern United States. In my opinion, these are two very positive steps in the right direction, which make me hopeful that they're able to break ground on their first hydrogen refueling station by the start of the fall this year. And as you can see, the market opportunity for clean hydrogen is enormous. And even if Nikola is able to take over 1 to 5% of this market in the EV space in the United States, then that would be a huge accomplishment in my opinion. And given the fact that these guys are already getting a head start, I'm very confident that they'll be able to address this huge opportunity sooner rather than later. So now that we've had a look at the company's fundamentals, their milestones, and what exactly is in store for the company in the long term, let's have a quick look at the stock price to get an idea of what exactly could be in store for this company in the very short term. As you can see, this stock has arguably been one of the most volatile stocks of the entire 2020 year. And it's quite incredible to see how far we've come from those highs at $94 back in the June of 2020. And it's kind of been the influx point of the rest of the resale market, because in the fall of 2020, we saw a lot of stocks go public. We saw this huge mania in the SPAC market, which really didn't exist before Nikola went public and before the merger with Nikola and the VTIQ SPAC closed in June of 2020. And obviously since then, we've had a lot of ups and downs where we've had short reports, we've had different insiders cashing out, we've had former chairmen stepping down, and we've had different types of volatility that's really plagued not only Nikola, but in general the entire EV and SPAC market. If you look at really any SPAC that went public throughout 2020, most of them have been underperforming this year, even though we've seen a little bit of a rebound in the growth sector of the stock market. And unfortunately, that's just the normal case with SPACs, because at the end of the day, the SPAC process really opens the door for a lot of dilution from warrants, from exercising of insider selling, and different types of things like that. And Nikola has been no exception to that. We've seen a lot of bounces up to these high levels, but we've seen a consistent downtrend on the stock, which right now is actually coming down to a pretty nice climax. The best way to judge that is by looking at both the 200-day moving average and the 50-day moving average on the daily time frame. And as you can see, ever since we had the cross back in October, November of 2020, we've actually seen the two moving averages get apart extremely wide. But very recently is when we're actually seeing these moving averages getting very close and tightly knit together. We saw a nice little run up from that May low because of the whole growth stock rotation. We've actually seen very strong volume on the upside, as you can see on the bottom, which signals to me that there's actually some fundamental and institutional support behind the stock's price movement. And obviously since the peak around the end of June and the 200-day moving average, we've seen a little bit of a pullback down to these $13 to $14 regions. My personal average on this stock is actually sitting around $16.40. I've been adding to my position quite a bit over the past few months, but ideally I would like to see a pullback underneath $12 to really start adding more and more shares. But generally speaking, if we don't really get to those levels, then I'd be really considering adding based off of good earnings reports and obviously the company actually achieving these milestones. But if we don't see the daylight under $12, I would definitely be adding to my position on good earnings reports and obviously on any catalyst where the company reaches their milestones. Because at the end of the day, this is a startup company and the best way to judge their performance is by how well they're executing on their plan. If we get above this resistance level around $18.90, I would consider that to be a very, very bullish move, because not only would we be breaking above this 200-day moving average and the 50-day moving average, which is what we here have in purple and yellow, but we would potentially starting a new uptrend. And given the fact that this company has some major catalysts that are coming up later this year, that could set up for a pretty explosive move in the stock price, in my opinion. Delving a little bit deeper into the financials, we can see that these guys are actually sitting on well over $700 million worth of cash as of the end of the first quarter of this year. And that's certainly something that's not going to last them throughout 2022 and 2023, in my opinion, because obviously this is a very capital intensive business model. So I do expect these guys to raise some cash later down the road, but obviously I don't expect that to happen until we see a very major valuation shift in the stock this year. So now that we've had a look at both the company's share price and the company's fundamentals itself, what exactly is the bottom line on Nikola stock, and what exactly are my opinions, and why am I really investing in a company that so many people deem to be so risky? And the main reason is that I actually have a lot of experience in the hydrogen fuel cells industry, and I've studied a lot about this sector and the growth potential that is available in this sector for the next decade. I personally believe that hydrogen really is the key to decarbonize a lot of the different sectors for us. And as we've seen over the past year, we are seeing very, very strong shifts in the way that climate change is affecting our lives. From the floods in Germany to the wildfires in the Western United States, we are seeing some major effects, and we can't delay things any longer. And in my opinion, transportation is one of the biggest polluting industries, from both aviation to trucking to shipping. And that's one of the reasons why I'm supporting Nikola and what they're doing. I believe their mission is extremely positive. They have a great team behind them. Obviously, there's a lot of execution risks, and before investing, you need to keep those in mind. There's going to be a lot of ups and downs, and as you can see over the past year, we've already had an idea of what exactly those ups and downs could look like. But for me, the market opportunity is just too great, and the opportunity to invest in a potential market leader down the road is just way too exciting for me, and it's an opportunity I can't really miss on. And even if there are a lot of haters online about this company and a lot of skeptics about hydrogen, I personally have a lot of experience and I have my own judgments that I can make myself. And as a result, I definitely cannot speak for anybody else. But anyways, guys, that's my 2 cents on Nikola stock. Let me know what you guys think about this company in the comment section below. Let's just make sure to keep it civil and respectful, and I'll catch you guys in the next video. Take care.